Okay, guys, so I just want to give a quick update to why I didn't post a trade last Friday. So I actually I took some longs, but then I got stopped out. And then this weekend, I also attended DJR's 3-day live event, and we still have one more day to go. So I learned a lot of stuff, and particularly, I learned to read the daily profile, the high resistance and low resistance draws on liquidity, and I also learned about what was it? Oh yeah, I also learned about fair value gaps and some stuff with them, and how they sometimes get invalidated, etc. So I took some longs. I My bias was bullish. I don't even know why. Um, so what I should have watched last Friday was we had I'm just gonna do this on Nasdaq, just a speed run because I don't have much time. So we had high time frame liquidity sweep during London session. We had so the daily profile was London manipulation plus reversal. What are we looking for? We are looking for New York continuation. So this is what I should have looked at. I was thinking like, oh okay, we swept Asian session lows and then we swept London session lows, so we should get a reaction. No, that's not what happened. That's not what I should be looking at. So New York continuation. So on the 5 minute, what we should be looking for is a 5 minute liquidity sweep. So market opens, we have this 5 minute high, we come down, we have this 5 minute high, we take this high out, but we needed we actually broke structure to the upside. So we needed what? We needed a 5 minute bearish SMT divergence. Okay, so we didn't get that. Then we come down, we take out this low, and we have this high, and right here we actually made a 5 minute. Oops. We actually made a 5 minute bearish SMT from these highs down to these highs. So it might not look like it, but high 25045.25, 25045. Okay, so we made a bearish SMT from for by 0.25. Okay, point. So we made a bearish SMT, and then what did we do? We got a 5 minute confirmation confluence because we were bullish. We broke structure to the upside, so we got a shift in order flow. We inverse this gap, this 5 minute gap right here. So we inverse this 5 minute gap, and then okay, we have 5 minute bearish SMT divergence. We have 5 minute confirmation. So we have high time frame liquidity sweep. We have 5 minute confirmation confluence, this inverse fair value gap right here. We have 5 minute bearish SMT divergence. Now we look for our third confluence, right? So we see that we are starting to go up. So we mark out equilibrium. We go to the 1 minute time frame and try to find an entry once equilibrium gets filled. And so once equilibrium gets filled, okay, it gets filled right here. We need a 5 minute confirmation confluence. 1 minute confirmation confluence. Sorry. So we have this 1 minute low right here. Oops. We have this 1 minute low right here. We have a 1 minute fair value gap. So oops. 1 minute fair value gap. So what we see, we inverse this gap. We could have entered short right here. What is our stop loss? Oh, this is another thing that I learned in the live event, in the combine. Our stop loss is above the second 1 minute high or low. So this is the first high, this is the second high. Now, just because it is so close, we can actually just put it above here. Just it's a bit more safe. So we can actually just do it like this. So what we target? We can target these 5 minute lows for our take profit one. Boom, 1.6 risk to reward ratio. Let's actually follow the strategy. 1.95 risk to reward ratio up to take profit 1. And if we want to extend the take profits, what could we have to? We could have gone, looked to the left. Right here we have these 4-hour lows and these daily lows, right? So these could have been draws on liquidity that we could have targeted, right? So we have these 4-hour lows. Boom! 3.4 risk to reward ratio. Oops. Oh, okay, actually. We had already taken out these 4-hour lows, so they were no longer valid. But probably we will just take full take profit right here. But if we didn't, I mean, we will do that, right? Just because these were a little bit far away. But if we didn't do that, look at this 3.4 risk to reward ratio. Although it took quite some time, but still, like, it's a fucking crazy trade. So from now on, I will be strictly following my strategy, and I also refined my crypto strategy. That is something I also want to tell. I refined my crypto strategy, and what I'm gonna do now is I'm just gonna journal every single trade here on my Excel spreadsheet. I will track all these different stats, and after 20 trades, I will take 20 trades, and after 20 trades, I will see my risk to reward, my win, my risk to reward, my win rate, and then I will decide if I'm happy with the results or not. And depending on that, I will move live or buy a funded account, but we'll just worry about that later. Now our goal is to simply follow our plan, our strategy, use risk management, and actually just follow the data. Do what the data tells us to do. If the data tells us that we have an edge right here and that we should buy, we are gonna buy. Okay, that is what I'm gonna do for these next couple of days. And yeah, I will also I will also write right here, every single day when I take a trade. I will write why I took that trade, my confluences for taking the trade. I will journal, and then I will write like here the confluences, what I could have done better, etc. And after 20 trades, okay, so after 20 trades, I will share the results with you guys. So I'm not gonna make videos for 20 trades, but I'm not gonna make videos whilst I don't do this. But when I make 20 trades, I will make a video about how it went and what my future plans are. Okay, so that with that being said, I see you guys in the next one. Peace.